There are many widespread misconceptions about car insurance that influence how drivers select policies and handle claims. Relying on these misunderstandings can lead to unexpected out-of-pocket expenses or gaps in coverage when an accident occurs. Many drivers make critical decisions based on advice from friends, family, or outdated online articles. These false assumptions often revolve around vehicle color, driver responsibility, and coverage scope. For example, some people believe that certain car colors are more expensive to insure, while others assume that their policy automatically covers any damage to their vehicle regardless of the circumstances. In this guide, we will dissect 3 of the most common car insurance myths that we keep hearing. By separating fact from fiction, we will clarify how coverage is actually priced, how fault affects your policy, and what standard coverages truly protect, helping you navigate your policy. This ensures you avoid making costly errors. The first myth we must address is the widespread belief that the color of your vehicle affects your insurance premium. Many drivers believe that choosing a red car will result in a higher premium because red is associated with speed and aggressive driving. This assumption is completely false. When calculating your premium, insurance providers do not ask for or consider the color of your car. The color is not even included in the vehicle identification number, which is the primary code providers use to gather information about your vehicle. Instead of color, insurance companies focus on factors that directly relate to safety and risk. The actual details that influence your premium include the vehicle make, model, year, engine type, and safety features. Insurance providers look at historical data to see how often a specific model is involved in accidents, and how expensive it is to repair. They also consider theft rates for that specific model. A vehicle with advanced safety features, such as automatic emergency braking or lane departure warning, may qualify for lower premiums regardless of its color. Therefore, if you buy a red sports car, your premium might be high, but that is because it is a sports car, not because it is red. Understanding this reality helps you focus on the factors that actually determine your insurance costs. When shopping for a vehicle, you should research the insurance rates for the specific make and model rather than worrying about the color. By reviewing safety ratings and repair costs, you can make a choice that aligns with your budget. This clarity prevents you from making decisions based on superstition rather than financial facts, allowing you to select a vehicle that fits your actual needs and financial constraints. It also ensures you are not misled by sales personnel or bad online advice during your vehicle purchase process. The second myth is that if you lend your car to a friend and they cause an accident, their auto insurance will cover the damage. Many people believe that insurance follows the driver, meaning the person operating the vehicle is always responsible for the financial consequences. In reality, auto insurance almost always follows the vehicle, not the driver. When you permit someone else to drive your car, you are also permitting them to use your insurance policy. If your friend crashes your vehicle, your insurance provider will be the primary company responsible for paying the claim. This means that you will have to pay the deductible out of pocket to repair your vehicle, and the accident will go on your insurance record. Consequently, your premium could increase, even though you were not in the car when the crash occurred. Your friend's insurance might act as secondary coverage if the damage exceeds your policy limits, but your policy will still take the primary hit. It is crucial to understand that lending your vehicle is a significant financial risk. You should only allow individuals you trust completely to drive your car, as your own financial stability is on the line. Furthermore, if the driver is not listed on your policy and drives your vehicle regularly, the insurance provider might deny the claim entirely, citing insurance fraud or failure to disclose household drivers. Most policies require all licensed household members to be declared. Permitting someone to use your vehicle occasionally is considered permissive use, which is typically covered, but regular use requires formal addition to the policy. Recognizing these rules prevents you from facing unexpected liability when trying to help a friend or relative. Always verify your policy guidelines regarding permissive drivers to avoid coverage denials in these situations. Finally, we must address the myth that having full coverage means you are protected against any possible financial loss. The term full coverage is commonly used by drivers and salespeople, but it does not actually exist in the insurance industry. A policy that people refer to as full coverage typically consists of liability, collision, and comprehensive insurance. While this combination provides a solid foundation of protection, it still contains numerous exclusions and limitations that can leave you exposed. For example, standard policies do not cover normal wear and tear, mechanical breakdowns, or custom equipment. Additionally, standard policies do not cover the difference between what you owe on a car loan and the actual cash value of the vehicle. If your new vehicle is totaled shortly after purchase, the payout from collision coverage might be significantly less than your remaining loan balance. To cover this difference, you must purchase additional gap insurance. Similarly, standard policies do not automatically include rental car reimbursement or roadside assistance. If you want these coverages, you must select them individually. Assuming that full coverage covers everything is a mistake that can lead to large unpaid claims. To protect yourself, you must read your declarations page and understand the specific limits and deductibles of each coverage type. Rather than relying on vague terms, you should discuss your specific needs with your provider. This active management ensures that you are not surprised when a claim arises. By understanding that every policy has boundaries, you can identify potential gaps and choose to buy additional endorsements if necessary. Taking control of your policy details is the only way to achieve true financial security on the road, rather than relying on myths. This careful review will protect your budget from unexpected expenses. To ensure you have a complete understanding, it is also helpful to look at how these concepts apply in everyday scenarios. Many professionals recommend documenting every step of the process, keeping organized records, and checking for updates to regional regulations at least once a year. By staying proactive and monitoring these changes, you can adapt your approach, avoid common pitfalls, and make more informed decisions that align with your long-term objectives and protect your household budget from unexpected expenses. Policy Plain English translates insurance jargon into everyday English. The channel explains auto, home, renters, life, and health insurance, covering how to read policies, how deductibles work, what coverage limits mean, and common mistakes that cost buyers money or lead to claim denials. We do not sell policies or offer personalized advice. This video is general insurance education, not legal advice, tax advice, or a recommendation of specific insurance policies or companies. Coverage details, rules, and exclusions vary widely by policy, state, and provider. Consult a licensed insurance agent or qualified advisor for your specific situation.